Now let us see. See here, even though section 54, section 56 says it's a charging section, there is no specifically, they don't say that this is the income, it is taxable under income from other sources. They'll give you the illustrative examples. If at all it is not falls under any of the four sections as a charging section, different heads, it is going to fall under section 56 by default. So it's a miscellaneous section or none of the above kind of thing. So I have given some of the illustrative list of incomes where income from other sources is going to comes into picture. Rent from vacant land. That is a ground rent, whatever you have received. See, if it is an land plus building, yeah, as we discussed, income from house property is a head of income. If you are getting only rent from vacant land, then income from other sources. Like that, interest on income tax refund. Yes, you have paid excess income tax. For that, the government has paid interest because of delay in remittance of your refund. That is also taxed under income from other sources. And casual and non-recurring income. Yes, if it is a recurring income, it is going to be charged under business or profession. If it is a non-recurring, that is once in a while, where your intention is to not to continue that particular activity. It's an occasionally you have done. Those incomes is going to come under income from other sources. What is casual income? Casual income is in the nature of like lottery tickets, whatever the prize money you have received, or something like you have played anything like it is like contingent incomes, I can say, which is neither it's a part of your profession or business or anything like. And indirectly, if you see, all casual incomes are, it is something like government is not going to encourage. For that casual incomes, the rate of tax is 30%. That's the highest slab. And one more thing, you don't get any basic exemption limit criteria also. It will be taxed as if you don't get any basic exemption, as well as chapter 6A deductions, what next we are going to discuss, that is also benefit is not available for that. And director sitting fee. See, for it is sitting fee is nothing but it's a conveyance. Who are having the honorary position in a company, they are going to share their thoughts towards the administration or decision making, but they won't be actively participating in management of the company. Wherever they are getting a director sitting fee, usually independent directors is going to get the director sitting fee, and professional directors as well. And then rent from vacant land, it's a duplication. Dividends except dividend under section 115O. Yes, all dividends are taxable except 115O. What it says, if the dividend distribution taxes has been paid by the company, then in the hands of recipient it is exempt to the extent of, now earlier it was totally exempt, now it is exempted to the limit. Then examination fees received by teacher from non-employer. Say for example, I am a lecturer in one particular college and I have attended valuation, which is paid, amount is paid by the university. So my employer and employee relationship is with the particular institution, but whatever the amount I am received as a evaluator from the university, that will be charged is income from other sources, not as salary. Like that, income from undisclosed sources of income. Say for example, yes, in my account there is a 1 crore credit of amount, but I'm not ready to disclose what is the source of that income. Maybe it is a legal or illegal. Once I say I am not able to disclose or I'm not intended to disclose that particular income, then it is falls under income from other sources, and the rate of tax is very much higher than the normal slab. Then directors commission received from bank for guarantees. Say for example, I'm a director. Usually I take back guarantees for my business, that is company's business. For that referral or whatever the business I have given, in personal capacity, if I get any benefit from the bank, that will be considered as an income from other sources. Like directors commission for underwriting of shares. What is underwriting of shares? Say if it is in private limited company, there is no question of underwriting, because whatever the known people, you can subscribe the shares. You can offer to subscribe the shares only with the known circle. But when it comes to public company and which is not listed, then you can approach through the prospectus to in the public, whatever the way. For that, whatever the process, as a director, as a promoter, you are going to do that work. For that, the company is going to pay some percentage of out of the subscribed capital. They are going to pay some percentage as a commission. That we call it as an underwriting commission. as of now, underwriting commission in practical sense, there is no much relevance, because maybe 10 years, 20 years back, the communication levels was not like today. If you have the WhatsApp group or Facebook, if you put it on the Facebook or WhatsApp, that itself is sufficient, where the people are being aware of the what is happening. So it is very easy to subscribe the shares also and to promote the company also. But earlier it was not so easy. That's the reason underwriting commissions was there. But as of now, I feel I haven't heard anything like this. Then remuneration received by MPs and MLAs is the public representatives. They are not the employees of the government of India. They are acquired position as a honorary. So whatever the remuneration received by them, that will be taxed as an income from other sources. And there is no relationship as an employer and employee between the government and the representatives. So that is also one of the reasons where you are going to tax it as an income from other sources. Then interest on employees' contribution from, say, whatever the accumulated interest or interest actually received from unrecognized provident fund. What is unrecognized provident fund? Which is not recognized by the CBDT. That is, if at all income tax has not recognized that particular fund as a provident fund, then whatever the interest the employee is received, that will be taxed as if an income from other sources. If it is recognized or any EPF, then the interest is exempt to the extent of 8.3 or 8.5%. Over and above, if at all received, then it is taxed. Otherwise, it is not taxed. Then family pension received by family of deceased person. What is family pension? Say, for example, I'm a government employee. A government employee is there. After retirement, usually he'll get the pension. After his death, if the family, that is the spouse, is getting any pension from the government or any concern, then we call it as a family pension. That will be taxed as if it's the income from other sources, because the pension is taxed as it employer and employee relationship, and it is taxed under salary. But when it comes to family pension, amount recipient and the payer, they don't have any relationship, because of obligation through the deceased person they are getting. That's the reason it is charged under income from other sources. Then compensation or any other payment received in connection with termination of employment. Yes, I said there is an employee and an employee relationship, employer relationship. In the course of employment, if anything you are going to receive, it is taxed as a salary. But if after your completion of employment, as a compensation you are receiving, as on the date of receipt, you are neither having any relationship with your employment. So it is taxed as if it is an income from other sources. And there are certain cases where if at all the income is not taxed under profits and gains from business or profession, then only it is taxed under income from other sources. Say, for example, there are certain cases where there is a possibility that, I'll take the example of insurance commission. Yes, I'm an insurance agent. My regular course itself is to do the insurance business. So in that case, I will be treated as an income from commission as a business income. But as a professional, I'm a chartered accountant. I'm doing some profession. Along with this, I am getting some commission, insurance commission. Then it will be taxed as income from other sources. Ideally, in my case, it is not allowed by the institute, so I don't get. But usually, if it's a tax practitioner or something like that, if they get, that will be taxed as income from other sources. Then these are all the incomes, if at all not taxed under business or profession, then it will be taxed under income from other sources. One is employee contribution to provident fund or any other statutory funds. Say, for example, yes, I am an employer. In EPF, what we do, employer is going to contribute 12% of his salary, and as an employer, I am also contributing 12% of salary. If employee is contributing, what it means, whatever the salary I am paying, out of that I am going to deduct 12% of what based on the calculation, and on behalf of employee, I am going to contribute to the provident fund. Now, what I have done, I have deducted but not remitted within the due date. If at all not remitted, then it will be considered as an income by the employer. It will be added to the, as if it is an income from other sources. Whenever I make the payment, in the year of payment, whenever actually made, in that year, it will be allowed as an expenditure in the hands of employer in income from other sources itself. Ideally, this is an overriding provision over all the provisions of the act, because neither here the intention is to earn the money or nothing. Still, to check wherever there is an employers is not contributing or not complying with the statutory due dates or anything. So it's a penal provision for them. Then interest on securities. Securities means anything like FD or bonds, debenture, whatever you call it as. If you are getting any interest, then it will be taxed under income from other sources. Then income from letting out of plant and machinery. Say for example, if at all I am doing the business of letting of plant and machinery or furniture, then it will tax as an income from other sources. Sorry, PGBP. That is a business income. But occasionally, if I am letting, in the courses, I have the surplus computers. Let us assume in my office I have surplus computers. So let it be for the time being, I can let it out for 1 or 2 months. Then it will be called as an income from other sources, not as an business income. And any maturity amount or any amounts received other than employer and employee, then through KIP, that is scheme and insurance policy, then it will be taxed as income from other sources. Let us come to dividend. Yes, dividend is also taxed under income from other sources, subject to what are the kinds of dividends you can see, because whatever the sections we are dealing, it is tightly connected to the Companies Act also. But I am going to limit my discussion towards the income tax. Yes, dividend received by Indian company. Say for example, dividend received through the Indian company. It is ideally it is exempt under section 10 subsection 34, and there is a clause for that. And this is subject to what? If the dividend distribution tax is paid by the company, then only the recipient is going to be exempted. Otherwise, it is taxable. And dividend received by foreign company. Say for example, I am a foreign company. I have invested some amount in somewhere in India. Say for example, foreign company means maybe in India or maybe outside India. In those cases, if the recipient is ROR, that is resident ordinary residence, then it is taxable. If it is a non-resident, then if it all actually received in India, then only it is taxed. Otherwise, it is not taxed. Then dividend received by any equity mutual funds. Say for example, I am a recipient received from equity based mutual funds. Those mutual funds, whatever the dividend they are going to distribute, that is exempt under section 1035. And deemed dividend. In lieu of, what is deemed dividend means? In lieu of dividend, if I am paying anything to the shareholders. What is in lieu? To evade, the intention is to evade the distribution tax. That is dividend distribution tax. Usually it is charged at 8, earlier it was 18.5, now it is 15, and for current year they have abolished that also. So if at all I want to like plan it or evade it, then whatever the amount received in lieu of dividend, it will be taxed as an income from other sources. Then casual incomes. What is casual income? As I said, it is winning from lottery or like kind of things. What is the tax rate? It is specific tax rate has been specified under section 115BB. It won't applicable for general income. It is a special rate. So it is taxed at 30%, plus if it is surcharge is there, plus education, as if it is going to be added to a regular tax liability at 30%. And is there any reduction allowed for this? No. Suppose I'm a regular buyer of lottery tickets. Regularly I'm buying the lottery tickets. Throughout the year I bought it. The expenditure is around 1 crore. And I got the lottery income out of this, that is in prize money is 10 lakh rupees. Now ideally what you are going to say, income is 10 lakhs, expenditure is 1 crore. Ideally what it should happen, minus 90 lakhs should be your net income. But what government says, this 1 crore, whatever you have spent towards this casual income, it is not allowed as an expenditure. So out of 10 lakhs, whatever you got, you pay tax of 30%. Ideally, it is to discourage. And also one more clause is chapter 6A deductions is not allowed and basic exemption is not allowed. Even my income is below 2.5 lakhs out of casual income. And if I don't have any other income also, I need to pay full tax of 30%. So that basic exemption of 2.5 or 3 lakhs or 5 lakhs is not applicable in this case. Then grossing up. What is this grossing up? Yes, I have received 10 crores, 10 lakhs as a prize money. First, you need to see whether the 10 lakhs is before tax or after tax. That means there are TDS provisions. Whenever a payer is paying any amount, there are certain clauses also like salary, professional fee, commission, or interest, where certain amount if you exceed, as a payer, I need to deduct some TDS and remit to the government, and balance I need to pay. We need to pay. In casual incomes, yes, as an organizer, I'm going to deduct 30% of TDS and balance I'm going to pay. You need to see whether the actual amount received is after TDS or before TDS. Always it will be after TDS because it's a mandated. So whenever you are offering to tax, you need to take gross amount, not the net amount. If at all you have received 10 lakhs, if it is 30% of deducted, that means around 13.5 lakhs is your income. So you need to offer to tax 13.5 lakhs, not 10 lakhs. Then there are certain exempted incomes under income from other sources. What are that? Interest on post office savings account up to 3.5 thousand, that is 3,500 rupees. Postal savings account income is exempted. Then if it is a joint account, it is 7,000 is exempted. And interest on, there are specified bonds are there. In those cases, say for example NHA, which is related to 54 EC bonds, where capital gains against you, or if you are investing, in those cases that interest is exempted. So there are specified bonds. It is, I'm not linking with the 54 EC, but still this is the case I can see. But there are certain cases where even though if you are not invested for the purpose of tax planning or tax saving, still certain bonds are, so interest on those bonds are exempted. The intention behind this one is which are all the specified bonds are there, that is for the specific purpose. Say for example NHA, if that is for National Road Authority to develop the national highways, they have that particular entity, your funding to that particular entity for infrastructure development in India. So these are all the cases, specific cases, you will get the exemption. And interest from tax-free pooled finance development bonds. There is a specific bonds. There's a gold deposit bond. Whenever there is a bond issuance, there itself they are going to specify whether it is exempted or under income tax or not. If it is exempted, you need not to pay any taxes on that. Then let us see. This is a gift. Generally, everyone will have the doubt towards the gift. Yes, income, it is taxable. Yes, everyone knows that because we are on the last day. What are all the incomes you are going to tax it? Yes, we know. How about gift? Yes, generally all gifts are taxable, but there are certain exceptions. Let us see how to tax the gift. See, receipt of money or property for inadequate consideration or without consideration. Let us see and divide into three parts. One is money, that's equivalent to check or whatever, fund transfer, whatever the amounts you have received. Second one is movable property. Third was immovable property. Let us see for the first item, that is money or check for all transaction. If at all, if you have received any money more than 50,000 in a year from different people, then also if it exceeds 50,000 in a year, the entire amount of gift is taxable. Suppose I have got 25,000 from my one friend and another 30,000 from another friend. So sum total is 55,000. Now what is the quantum of taxability? Entire 50,000 is taxable. Suppose 125,000, another 24,000. That means total comes to 49,000. Entire 40,000, 49,000, I need not to pay any tax. So if it is below 50,000, no taxable. If it is above 50,000, entire amount is taxable. So it is not a basic exemption. Once you cross, entire amount will be taxed. When it comes to mobile property, yes, if cash, there is no issue. If it is in kind, that means movable or immovable, there are two chances. One is with consideration, without consideration. Another one is inadequate consideration. If I say free means without consideration. Whenever the property that's a movable property you have received over and above 50,000, then the amount will be equivalent to like that. Above whatever we discussed, if it is above 50,000, the entire amount is taxable. And if it is inadequate consideration, what is the amount you are going to arrive is, say for example, the property is whatever the property I have received is a car. I have received a car as a gift with inadequate consideration. Actually, the market value of that car is 5 lakhs. I have paid him only 3 lakhs. Now, what is the inadequacy in consideration? That is 2 lakhs. You need to compare the 2 lakhs with 50,000. If it exceeds 50,000, then entire 2 lakhs is going to be taxed. Then receipt of immovable property. Yes, we have done with cash or bank, then movable property. Now immovable property. If you have received any immovable property, where you see in first and second case what discussed is you are going to see the aggregate value. But when it comes to immovable property, you're going to see the single transaction wise, that is single property wise. So individually we are going to see. Now, without consideration, if 50,000 above it exceeds, then entire amount is taxable. So you have not paid anything, the same concept for the earlier, but here you are going to say single transaction wise, not as an aggregate. And if the inadequate consideration, here we have the clauses. So if at all inadequate consideration is higher of these two, say for example 10 lakhs, 9 lakhs is the worth of property, there's a differential between the market and this one. 5% of consideration, let us assume 5% of consideration of 9 lakhs is 45,000. You are going to compare that 45,000 with 50,000. If it exceeds above, that is higher of these two, that is 50,000 and 45,000, that is higher of these two is 50,000. What is the inadequacy? If you bought that 9 lakhs property for 7 lakhs, then you are exceeded that 50,000. That means I'll just give you an example for this. So the property value is 9 lakhs. This is a market value, fair market value. Consideration I have paid is 7 lakhs. So what is the benefit I got? It is 2 lakhs is inadequate consideration. This is important. Secondly, what I am going to compare? I am going to compare 50,000 and 5% of the property. What's the value of property? It is 9 lakhs into 5%. Is it I am going to take these two, and whichever is higher I am going to take. Here in our case 50,000 is the higher. I am going to compare this 2 lakhs against this one. If it exceeds 50,000, then entire 2 lakhs is taxable. In this case, entire 2 lakhs is taxable. I'll take another example where 15 lakhs I'll make this. Now, what is the amount you are going to compare here? 50,000, not 50,000 into, sorry, here 50,000 and 75,000. Here I am going to take maximum of these two. How much? 75,000. So if this 8 lakhs, that is difference in consideration, exceeds 75,000, then entire amount is taxable. In this case, 8 lakhs is taxable. That's what I am trying to tell you. Next. Following are the gifts not taxable irrespective of their amount. There are certain cases where even if you get above 50,000 as a gift, it is not taxable. There are specific cases and occasions. Let us see one by one. If you have received any gifts from relative, yes. Now what is relative? Let us see further. But now let us read it. So gifts from relative, it is exempted. And gift received on marriage. See, whenever you are receiving any gift on occasion of marriage, it is exempted. Now the question is, how many marriages? In number of marriages. If you marry for 5 times the gift is exempted. Next, gift received in contemplation of death of the payee or donor. As a will, I can say it's an will or inheritance, or it is something like that. If the nominee is there, say for example, as a capital received, my friend has puts nominee in my name, and because of that, I got some amount. That is in the nature of gift, and because of death, I got the amount. So that is the reason it is exempted. But with the love and affection, the both the gift regularly if he gives also, it is because of love and affection. As a nominee also, it's love and affection. But if it is as a nominee, if I get, it is exempted. Otherwise, it is taxable. And the gift received under will or inheritance. What is will? If a written document has been there, and there it is going to specify who is the owner of, who is the next owner for that particular property, then it is called will. Inheritance, there is no document. By legal, what is that? If you have 2 or 3 sons and all the 2 or 3 sons is going to get the right, that is called an inheritance. That is through legal. And gift received from local authority, what it is, say for example, because of COVID-19, the authority, that is a government or any person, they are distributing milk or rice or some consumables, all those things for a household, that is fully exempted. Then gift received from registered charitable trust. Say for example, I have received some groceries because of this only. Say for example, COVID-19 from a trust, then it is exempted. From the other person, I am going to see the again 50,000 criteria. Gift received from a trust from individual. Say for example, I am a trust registered trust where I am getting registered trust and not under income tax, but it is in the regular course. It is for the benefit of particular person. Say for example, I have formed a trust, I have transferred some property to a particular trust. To my son, it should be benefited. That is the intention of trust. Whatever the amount I am given to the trust from an individual, it is exempted because there is no there is a transfer of owner or there is a change of owner, but the intention is between the relatives only. So it is a kind of relative definition. Then let us see who is relative. This particular provision, whatever the exemptions I have discussed, it is for the individual and HUF. So other cases it is not applicable. So if it is come to individual, these are all the list. We call it as a relatives. When it comes to HUF, relative means any member of the HUF. Now let us see relative. Spouse, brother, sister of the individual. Say for example, A, Mrs. A is a relative and brother of A and sister of A is relative. Next, brother, sister or spouse of the individual. Yes, we are looking at A, so that Mrs. A's brother and sister is also relative and linear ascendant and descendant. My father and mother and my children will be like relative. And when it comes to spouse also, father and mother and kids. Then spouse of any of persons referred earlier. Whatever, if you draw a chart, who all comes into picture, you need to include their spouses also. Say for example, I am my brother. I am going to include my brother's wife also as a relative, like that. So spouses also included as a relative. This is a wider chart. If you draw it clearly, you can understand. Then, what are the permissible deductions under section 57? See, income from other sources is whatever we have discussed, section 56, it's a charging section. Now, what are the deductions are available out of the income? Like in business income, we have discussed so many sections and specific provisions. Income is there and deductions also. Similar way, 56 and 57. 56 is a charging section and 57 is a deduction section. Now, commission, there are specific deductions are allowed. So commission and remuneration paid to raise the dividend or interest. Say for example, I wanted to realize some interest or dividend. I have appointed some broker. For them, I have paid some commission. So that is allowed as a deduction. Then family pension. Wherever you are getting the family pension, lower of these two is allowed as a deduction. One is 15,000 or the actual amount we received 1/3. You are going to compare both. Say for example, 1 lakh you have received family pension, then you are going to compare 15,000 with 33,000. Whichever is lower, 15,000 is allowed as a deduction. Next, employee contribution if remitted by the, yes, in 56 I said is a penal provision. If employer has not remitted within the due date, then it is added as an income. Whenever he has remitted, it is allowed as an expenditure. And when it comes to any letting of plant and machinery or furniture, yes, I said either it is possible as a business income or as an income from other sources. Now, if we see it is an income from other sources, related to that, we need to allow expenditures also. What are the kinds of expenditures? Usually, one is maintenance expense of particular item, maybe repairs, something like that. Second one is if you have paid any insurance. And third one is if there is an asset, if it is depreciable, depreciation is allowed. Again, what is the rate of depreciation? As section 32 says, that is the rate of depreciation you are going to claim. Then inadmissible deduction. There are certain deductions which is specifically inadmissible. One is personal expenses. If you have met any personal expenses toward a particular income, no, it is not allowed as an, say for example, SP interest I have earned. Out of that, is the bank charges is allowed as a deduction? May not be, because whatever the interest on SB you have earned and the expenditure on bank charges need not be correlative, because there are so many transactions you have done, maybe is a personal nature or business nature, whatever. So whatever the interest earned or accumulated, it need not be bank charges, may be allowed or may not be allowed. Excessive payment to relatives. Say for example, I am doing the plant and machinery renting. where I felt, yes, I'm going to pay some repair charges to my son. So generally it may be 500, but for my, because he is my relative, I have paid 5,000. So in those cases, it is not allowed. And any payment in a day to a person exceeds 10,000, then also it is not allowed. So in the section 40A subsection 3, there is a specific clause. If at all any business expenditure you are making more than 10,000 to a person in a day, it is not allowed as an expenditure. Similar provisions here also there. And disallowance stipulated with regard to TDS defaults. Say for example, in case of if you have not deducted TDS, then what is the consequences? If it is a non-resident, the entire amount will be disallowed. If it is a resident payments, then 30% of expenditure is disallowed. Whenever you make the payment, it is allowed as a deduction. Then there are certain deductions, that is chapter 6A deductions, which is allowed out of gross total income. What is gross total income? Sum total of 5 heads of income is equal to gross total income. From gross total income, there are specific deductions are allowed. Out of that, I am going to cover 2 or 3 provisions. Now, whenever we are discussing chapter 6A, for capital gain income, chapter 6A is not allowed, and casual incomes, it is not allowed. Rest of the other incomes, it is allowed. Now, let us see popular section, that is 80C. See, 80C is applicable for individual and HUF, and which is on only payment basis, and whether taxable or exempted incomes. Both the cases, it is allowed. Then, if you have invested this 80C out of taxable income or exempted income, I mean to say, it is both are allowed. Then deduction is lower of eligible investment. Out of this, whatever the specified list, you need to calculate the total amount of investment, and you are going to compare 1.5 lakhs. Whichever is lower will be allowed as a deduction. Now, what are all the payments? Now, if you see, you can categorize into 2 parts. One is expenditure based deduction. Another one is investment based deduction. Let us see one by one. Contribution towards the mutual funds. And other than unrecognized provident fund, rest of the things are covered. If you have contributed towards that, then it is allowed. Then subscription to Sukanya Samruddhi scheme. Yes, there is central government scheme. For that, if you have contributed any amount, that is allowed. And if you have subscription to NSC or the NABARD bonds or mutual fund notified units, then also it is allowed. That is, we call it as a tax saving mutual funds, ELSS scheme. Then any amount deposited through, these are all the schemes where it is deals with the term deposits. It is a minimum of 5 years. It's a locking period. You cannot withdraw within 5 years. If you deposit these term deposits, then it is allowed as a deduction. Payment made to non-cumulative, cumulative deferred annuity. Say for example, there is an annuity plan. It has been prescribed where annuity is given in equal intervals, but it is not commutable. That means you cannot commute it. That means, say for example, in LIC you have the scheme called pension scheme. You are going to pay for 30 years. From 31st year, you are going to get the annuity. That is a pension. Annuity is equal to pension. In those cases, if it is not commutable within that 30 years, you can surrender the policy, but it cannot be commutable. That means if you surrender 50% of the annuitation, then the remaining 50% lump sum amount, if they are paying, then it is not eligible. But if it is after 30 years, whatever you want, you can do it. But before 30 years, if it is not commutable, then only it is eligible. Then unit linked insurance plans, that is also allowed. Then contribution to National Housing Bank. See, if at all, if you are invested any term deposit in National Housing Bank, that is also allowed as a deduction. Contribution to approved annuity plan of LIC. What is meant by approved LIC plan? Because all the plans are approved by IRDA, there is no doubt. But when it comes to income tax, there are one condition is 1:10. That means here I have mentioned premium paid to life insurance policy, that is 1:10. That means if whatever the premium you are paying, that should be equal, that is more than 10 times of your sum assured is equal to 10 times of your premium payment. That means premium payment should be 1/10 of the sum assured. It should not exceed 1/10. Then tuition fees payment. Here tuition fees, it won't include donation payment. Only whatever the curriculum fees or something like that, that will be allowed as a deduction, maximum 2 children. Then let us go to next section, that is section 80DD. What is this one? Any deduction for the maintenance of dependent disabled. What is disability? If it is incapacity, mental incapacity is also included and physical also included. Now we are going to categorize into 3 parts. If the disability is less than 40%, no deduction is allowed. If it is between 40% to 80%, then 75%, 75,000 is allowed. More than 80%, then 1.25 lakhs is allowed. Now, whether you are going to spend for this need not be. Even if you don't spend anything, even then the entire amount is allowed as a deduction. Now, to whom it is applicable? I said individual and HUF. I said dependent. Who is dependent? In case of individual, spouse, children, parents, brothers and sisters is a limited scope. When it comes to HUF, any member of HUF is allowed. But whenever in individual capacity, if you are claimed this deduction, in HUF you cannot. So dual benefit is not allowed. Next, let us see 80D. What 80D deals with? Medical insurance premium. If at all you have paid any mediclaim policy premium, then this is going to applicable. To whom it is applicable? Individual or HUF, resident or non-resident. If it comes to other 80DD, it is applicable only for resident. No, it is for resident or non-resident, and the mode of payment is other than cash. If you are paying medical insurance policy, it should be paid other than cash. That means you might be paid through check or online payment or whatever the mode. It should not be paid in cash. Then preventive health checkup, it can be paid through cash. What is preventive health checkup? Say for example, as a measure of caution, if you have done some annual checkups, for that up to 5,000 rupees is a maximum actual amount spent, or 5,000 is allowed as a deduction. On whom? On family and parents. And what is family? Family includes individual, spouse and dependent children. And parent means father, mother, maybe dependent or independent, both are allowed. And in case of HUF, HUF means any member of HUF. You have paid any premium on any member of the HUF. Let us see, here also I have classified into 2 parts. One is to whom you are paying the premium. Second one is medical expenditure. So the premium payment has been further classified into 3 parts. One is medical insurance premium payment. Second one is contribution to central government health scheme. Third one is preventive health checkup. In first case, medical insurance premium is allowed in all the 3 cases. That is individual for his family and individual for his parents. And when it comes to HUF, any member of the HUF. Then contribution to central government health scheme, which is applicable only for the family, that is his spouse and children. Parents is not applicable, and member of HUF, that is for HUF also it is not applicable. Preventive health checkup, it is applicable for family members and parents. What is the maximum of deduction? That is maximum amount of deduction is in case of family members it is 25 and parents it is 25. It is an HUF 25. And if the premium is paid for senior citizens, then it is addition to that another 25,000 is allowed. So 25 plus 25 in all the cases. Say for example, my age is 50 and I have taken a policy and I have paid 40,000 as a premium. Then it is going to qualify under this category 25,000. Suppose apart from that 40,000, I have paid my parents premium also. They are above 60 years. I have paid 50,000 rupees. In that cases, the another 50,000, that means 25 normally I would have got. Apart from that, in addition to 25, I'm going to get another 25. That is 50,000 in total. So if I paid 50,000 to my senior citizen payments, entire 50,000 along with 25,000 is allowed as a deduction. So if you see the class wise maximum is 50. In sum total maximum is 1 lakh. If I am paying for my family and for the parents, it is 1 lakh. And only for the family, it is 50,000. What is only for the family? If I am the age of above 50 years, 60 years, then I am a senior citizen. If I am paying the policy premium, then up to the extent of 50,000, it is allowed. and my, if at all my age is 60 plus and my parents is obviously it is 60 plus, then in those cases it is 1 lakh is allowed. And I'll try to give you one illustration towards how to calculate total income. Yes, let us see the question. Here I have given, I'm going to explain you and I'm going to share this calculation sheet. You can go through and you can work it out once. What is the content of this? I have given the age of the assessee and I have given the for which year. The assessment year 1920 I have given. Receipts and payments also I have given. Now what is the receipts they are having? One is salary and tuition free for art classes and winning from lottery and rent received, sale of rural agriculture land, agriculture income, sale of land, interest on SB, interest on FD. These are all the receipts. This we need to see whether it is taxable or not. Then there are certain payments, interest on home loan, municipal taxes paid, principal repayment of home loan, tuition fee, medical insurance premium, then expenses to conduct art classes, lottery tickets bought, because there isn't lottery income here, lottery tickets bought. Then purchase of residential house, stamp duty paid on above, and brokerage paid to sale of land. Then there are certain notes also there. Let us see what it is. Medical insurance premium paid in cash, unrealized rent 15,000, 1/5 of pre-construction interest is 35,000, land that was sold acquired in 2005. She was owning one residential house at the time of purchase of new house. Then cost of inflation index they have given. Then TDS on interest, that is FD 6,000 and lottery winning it is 30,000. Then cost of land it is 10 lakhs and cost of rural agriculture land where what was sold it is 10 lakhs. Let us see what will be the solution for this. Yes, there is a salary income of 6 lakhs which will be taxed under salary income, and deduction for the assessment year 1920 it was 40,000, now it is 50,000. Then there is a next income is free from art classes. Either you can take it as a business income or as an income from other sources. I have taken it as an income from other sources. I have taken 75,000. Next, winning from lottery. Yes, we know it is taxed under income from other sources. Winning from lottery. Yes, actual received is 70,000, and also we have the information towards the TDS. How much they have done the TDS on that 30,000. So I have grossed it up. It comes to 1 lakh. Then rent received which is taxable in the house property. So what is the rent received? It is 1,45,000. Then sale of rural agriculture land. See, once it is qualified as a rural agriculture land, it is not a capital asset. So we need not to pay any tax. Agriculture income. Yes, there is an agriculture income up to 5,000. That aggregation provision is not applicable. If it is above 5,000, whatever we have discussed about how to calculate agriculture income, that is going to come into picture. It is 4,000. So it is not applicable. Now sale of land. Sale of land, yes, it is in capital gain provisions is going to come into picture. Now I have taken the sale consideration as 65 lakhs. Then SB interest and FD interest, which is taxed under income from other sources. Then interest on home loan. What is the relevance of this? Yes, we know, we have studied interest on home loan is allowed as a deduction under house property income to the extent of whatever is possible. So interest on home loan is, I have taken here 3 lakhs and another 35,000. What it is? Pre-acquisition interest. Yes, we have here mentioned 1/5 pre-acquisition is 35,000. I have added that as well. Next, municipal taxes paid. How much it is? 5,000 municipal taxes paid. So 5,000 rupees here I have taken 5,000, which is deductible for arriving NAV. Next, principal repayment of home loan, which is qualified for what? It is 80C. So deduction is allowed. For that I have taken. Next, tuition fee 35,000. Yes, there is a tuition fee paid for children. It is 35,000. That is also ATC benefit is available. Now there is a medical insurance premium paid for senior citizen. But how will they have paid? It is paid through cash. So it is not eligible for 80D. Then expenses to conduct art classes. Yes, whenever there is an income for art classes 75,000 towards that expense we need to allow. So I have reduced that 13,000 out of that income. Then lottery tickets bought. Yes, there is a lottery income of 1 lakh. There is an expense of 2 lakhs. Whether it is allowed? No, it is not allowed. Then purchase of residential house. There is a sale of land 65 lakhs. And there is a purchase of residential house. What is this relevance? 54F we have studied yesterday. There is a deduction available, exemption is available under this particular provision. So I have taken that figure here. Then stamp duty paid on above. Yes, for this whatever I have sold, for that purchased, for that there is an expenditure that also I have included here. And there's a brokerage for land, it is paid 60,000. So I have reduced 60,000. Let us see the solution once again. There is a salary income of 6 lakhs. For current year it is 50,000. Last year it was 40,000. Then GAV, that is rent, a gross annual value 1,45,000. There's a municipal taxes paid. I have reduced it. So it came to 140 and 30% is allowed as a standard deduction. And there is an interest on home loan. How much? 3.35 lakhs. Because let out, there is no limit. Entire amount is allowed. What is the total loss? It is 2.37 lakhs. But what is the current allowed? It is up to the extent of 2 lakhs is allowed. Balance 37,500 is carried forward to the next year. Similar way, capital gains 65 lakhs is the capital. What is the amount received? Out of that, there is around 60,000 towards the expenses of transfer. And because it's a long-term capital asset, we know the years above 24 months it is holding period. So indexed cost of acquisition is allowed. How we have calculated? Here is the calculation. 1 lakh is the purchase cost, and I have taken the indexed figures. This will be the figure. Then what is the capital gain? 40 lakhs, 46,000 is capital gain. Out of that, what is the exemption is allowed? Under 54F, any capital asset and buying of residential house. And also they have specified they don't have more than one residential house as moment. So 54F conditions is satisfied. Now how you are going to calculate? 45 lakhs is the purchase of that land, plus you have paid for 4 lakhs as stamp duty or whatever. So total cost is 49 lakhs. Then you are going to calculate accordingly for this purpose, that pro rata basis. Now what is the net consideration? 64 lakhs 40,000 and into capital gain is 40 lakhs. So proportionate deduction is allowed. 9 lakhs is taken as a capital gain. And income from other sources is 75,000 art classes income and 13,000 as a towards that expenditure. And I have grossed up the income. Here I have taken 54,000. Here it should be 60,000 because there is an TDS of 6,000. So it is 60,000. That is here I need to include here also grossing up. So it comes to 60,000. Now exempted agriculture income is 4,000. It won't be part of the taxes. And there are two ATC benefits are available. One is 2 lakhs of principal repayment and the tuition fee. The maximum allowed is 1.5 lakhs. And SB interest is there up to the ITTTA. There is a one provision I haven't discussed. 10,000 up to 10,000 which is allowed as a deduction. So taxable is 14 lakhs 4,000. Now I have categorized into different tax rates. One is capital gains, second one is winning from lottery, and normal rate is for the rest. So this will be the total taxes on this respective tax rate has been applied, and this is the sum total. On this we are going to apply higher and education cess and 36,000. There is a TDS and we have deducted that. This will be the tax payable. There is a one provision, it is called advance tax. You need to pay 4 times in a year advance tax, as if you are earning every day. Like that, government also expects at least to pay quarterly once. If at all, if you are not paid the quarterly advance tax, then you will need to pay additional taxes on that. This is how the calculation goes. 15% is the first quarter you need to pay, that is 15 June is the due date, and September 15th is the second due date, that is 45%. Third due date is 15th of December, 75%. By March 15th, you should have paid entire amount. If you are not paid, you are going to pay first quarter 3% as an interest, second quarter 3%, third quarter 3%, and fourth quarter it is 1% because only 1 month. So we are going to take the financial year, that is the previous year period, till the payment in the next year. 234C is going to comes into picture. B and C, there are two provisions which deals with the previous year one, and till the date of payment it is one. This is a separate topic. I need to explain you for an half an hour, but in the brief I have given this. Go through this illustration. If you have any queries, definitely you can come back.